Hello and welcome to the Signia Wealth April market commentary. My name is Ammalan Annalingam. I'm the co-head of multi-asset investments here at Signia. Whilst April wasn't quite as dramatic as March, it was nevertheless a historic month as risk assets rallied strongly and markets reacted positively to the sheer quantum of fiscal and monetary stimulus. Indeed, barely a month after launching the $2 trillion stimulus package, the US is now adding another $300 billion via the Paycheck Protection Program, which will offer government-backed loans to small companies. Additionally, here in the UK, the government is now guaranteeing 100% of loans up to £50,000 for small businesses. This guarantee used to be 80%, but under pressure, the government has now increased that guarantee to 100%. Going back to markets, it was in fact the best month for the S&P 500 since January 1987, and it would have been the best month since October 1974 had it not been for the mild sell-off in the last day of the month. The S&P rallied 12.7%, whilst other indices around the world had much smaller gains. The Euro stocks rallied 5.1%, the FTSE 100 rallied 4%, and emerging market equity rallied 7.3%. Part of the S&P outperformance can be explained by the relatively large sector weight to technology companies, which outperformed other sectors, and this is evidenced by the fact that the Nasdaq posted a 15.5% gain over the month. Much of the market rises in equities was due to the fact that whilst coronavirus cases continue to rise substantially and now stand at over 3 million, markets have been supported by the much slower growth rate in cases and slower growth rate of deaths in April relative to March, which in turn means that governments can be focused more on easing lockdowns and reopening economies compared to the situation in March. It was a good month for core sovereign debt, with treasuries, gilts and bonds adding to their year-to-date gains, and this was despite unprecedented levels of fiscal and monetary stimulus. It was a very eventful month for commodities and oil in particular, with the WTI active contracts down 23.1% in May. And whilst OPEC have been discussing production cuts, the collapse in estimated demand for oil outweighed any supply reduction. During the month, oil historically went into negative territory, reaching a price of minus $37.63 per barrel on the 20th of April, as investors were willing to pay to have delivery taken off their hands. This was mainly due to a technicality involving investors having to take delivery of the May contract while storage capacity was at its limit. So an eventful month in April, and we will revert in May. Thank you.